Can my job be replaced by AI one day? I think it should be. It is one of those. We are so busy in our work running around, we don't realize that the world is aging. And as we age, and we all need to look at our parents and grandparents to realize that how the needs change. What have we achieved since we started talking about the environment 20 years ago or 30 years ago? Even now, what if I tell you that 85% of all energy requirement comes from fossil fuels?
So, joining me from Dubai is the chief economist with the Commercial Bank of Dubai. His name is Deepak Mehra.
Because you'll have huge surpluses. Remember, we are still discovering new oil fields. Technology is making it easier to drill deeper, becoming more efficient in extracting oil.
What are the 4 or 5 most defining trends that you see currently where I guess the effects are already starting to be felt and the ripple will carry on for the foreseeable future? Well, welcome to today's episode of Couchonomics with Arjun. This is yet another virtual episode because I couldn't make it back in time to my studio in Dubai. So joining me from Dubai is the chief economist with the Commercial Bank of Dubai. His name is Deepak Mehra. Deepak, welcome to the show.
Thank you, Arjun. It's such a pleasure and, more importantly, an honor to be on your very prestigious show. So thank you again.
Very, very, very kind of you. I would have loved to have welcomed you in our sort of cozy studio in Dubai and sort of have you on the couch. But I didn't want to give up the opportunity of having this dialogue. So I thought, why not just go ahead and have this dialogue? So Deepak, let me start. Simple question. What does a chief economist of a bank do?
Oh, this is the first time I've been asked this question, Arjun. Uh, so the chief economist of a bank, if you are navigating a ship, is like your weatherman. He's going to be checking the weather for you and seeing where to navigate, where are the opportunities, or where are the risks. More from a macro perspective, not so much in micro uh, details, but more on the bigger picture. So as a bank, we are very interested in knowing what is the interest rate outlook because that's how we make money. So the UAE's economy is, the currency is pegged to the US dollar. So studying the US dollar interest rate outlook is very important for us. And therefore, behind that, you would have to then study all of the US economy to see where is the interest rate heading. Similarly, local economy, we need to check how's the GDP developing, how's the consumer confidence doing, and we don't get those measures very clearly in the UAE, but then you have proxies. So I would be seeing how are the property transactions going in Dubai, or how's the tourist arrival looking like? Because those would be the proxies for consumer confidence, for consumer spending, retail sales, and therefore, banking revenue opportunities. My inputs would go into different departments of the bank, from risk management to credit to treasury to wealth management and so on. So every department would then take inputs from me.
And so if I may ask another question, right, which is uh, obviously the role of the economist or the chief economist might still sort of stay the same in terms of the definition, but you have so much more now available in the sense of data, in the sense of analytical tools, right? How has that evolved the role in the last, if I may say, the last decade?
I think technology has really changed the whole space. So it's no longer hunting for data or trying to analyze data from the very scratch. A lot of analytics is done by data management tools for us. A lot of insights are actually coming out of those tools. So can my job be replaced by AI one day? I think it should be. It is one of those.
It is one of those rules. We're not gonna. This show is not about how AI is going after everybody's job or not. But you made a very interesting point, right, Deepak? So you see a number of macro trends, right? You not only see them at the local economy or the regional economy, you actually see them from a global perspective, right? If both of us take a sort of a back seat right now and not get into a particular rabbit hole just yet, right? uh, I know a lot what you might say sound very obvious, but I really want to hear it out of your mouth, which is there's so much going on in the world right now, right? In terms of what we might deem as trends or shifts, right? In your view, what are the 4 or 5 most defining trends that you see currently where I guess the effects are already starting to be felt and the ripple will carry on for the foreseeable future? Which ones are those top 4 or 5 for you?
Yeah, fantastic. I think we are seeing some mega trends evolve here. The three that I'm really keeping my eye on, number one, of course, is environment. And the reason I say it as number one is because it is the most pressing, but also probably it has one of the easiest solutions out there in my mind. The second bigger trend is the aging population. I think we are so busy in our work running around, we don't realize that the world is aging. And as we age, and we all need to look at our parents and grandparents to realize that how the needs change. Is the world really prepared that the number of people above 65 is going to double in the next a decade or so? And the third big one that for me is artificial intelligence and digitization technology, um, which is going to change the whole way we look at the world, how we do business. And these three trends, Arjun, will have very big implications on businesses, governments, individuals, you and I.
Okay. Do you mind we dig into these?
Yeah,
Right.
please.
Let's start with the environment, right? Because you mentioned that in you believe it has a simpler and easier fix, right? Everything I read about is that, you know, global warming is an inevitability. We see that happening. The amount of money that it will take to be able to mitigate some of these, well, the impact of global warming is not flowing in. Leave alone managing the climate change, we don't even have sufficient mitigation factors in the play, right? And that seems to be, I guess, a universal opinion across the world, with obviously there's an exception, people who feel that this is fear mongering and nothing's ever, this isn't a bad thing, this is cyclical, it'll go and go away. Let's not talk about the X and the Y. Let's assume that the climate change is everything that people say it is, and I'm firmly in the belief that how do so a how does it play out for us in the next sort of 5 to 7 years or 10 years? This is sort of unfortunately the myopic view most people have, right? And why do you feel it's easiest or easy to fix?
Yeah, I think, thank you very much. I think it's a fantastic point. I wish we discuss it more often. Look, the point you made about how much money is required to fix this, I think some estimates tell us it will be something to the order of 25 to 50 trillion dollars if we have to fix it by 2050. Now, that sort of money is not available. The governments are highly indebted right now worldwide, and hence everyone is look doing a lot of lip service, but very little is being actually done on the ground. In fact, the countries here in the GCC are probably leading the pack. UAE is probably one of the most leading, in this space. But it, if you take a step back and you see what have we achieved since we started talking about the environment 20 years ago or 30 years ago, even now, what if I tell you that 85% of all energy requirement comes from fossil fuels?
Mm.
So this is after 30 years of concerted effort. If you look at renewables, in 1980, renewables contributed to 6% of the world energy mix. Today, that has just gone up to 13.5%. So is that all we've achieved after so much of noise and so much of spending? So the problem here is that we are trying to address the user industries. We are not trying to address the source of energy. And that is why I think the solution is very simple. If you change the energy mix, you achieve immediate environmental goals. And let me take a step back again. We keep talking about EVs. Now, fine, we think we're driving an EV, we are doing well for the environment. Where does the power come from? Which charges the EV? So I think we need to address the source. And the source has been very beautifully addressed in France, where 65% of the power comes from nuclear energy. And in France, the CO2 emission per capita is one of the lowest among the developed countries. It's like one third, less than one third of the US. Per capita CO2 emission in France is one third of the US and is the lowest amongst developed countries. It's
So
because they're using nuclear power.
I agree, Deepak, but that raises two questions, right? And I'm no environmental expert, but it's a topic that does concern me. I think I don't disagree with you. I think we're trying to address the symptoms, or as you said, the user industries, rather than actually going to the source. But there are a couple of challenges out here, right? One is, for whatever reason, nuclear has not had global adoption, right? There have been reservations with certain countries who have not yet got onto the nuclear bandwagon, who could have, right? And for whatever reasons, maybe I'm correct, maybe I'm not. France obviously seems like an exception, because it's not like as if nuclear power is beyond other people, right? The second issue here is that it actually has quite an immediate impact on, I guess, the economy of today, right? Because let's be honest, energy production is, a large industry, right?
Yeah.
It funds billions and billions of dollars of any economy. It puts a number of people through their jobs and lifelong jobs, right? And then that drives communities and so on and so forth. So if I do take a step back, how do you address this issue? How do you address real conundrum of today, right? And politicians in most part of the world get only elected for a certain number of years, right? And this sort of systemic shift that we need to make towards cleaner source. I understand it's easy to debate. How easy is it to implement?
Yeah, I think that's now making it very difficult because this gets into the political realms. And maybe we don't want that solution, which is the easiest solution. I mean, my only argument is rather than spending all these hundreds of billions of dollars in fixing the user industry, why don't we spend that same money in making nuclear power more safer? Uh, that would be an easier battle won rather than going out and trying to change everything at the last point of the usage. Of course, I have no answer for what will happen to the employments that get generated due to the energy sector overall. But I think if we have to fix this problem, and the problem needs fixing immediately, uh, 70% of all carbon of greenhouse emissions are because of the energy industry, whether that energy is feeding transportation or it's feeding buildings or it's feeding industry. 70% of the world uh, greenhouse emission. The agriculture and the industrial processes and the waste decaying and all that is merely about 20 odd percent.
Hmm.
So we need to fix the energy industry if we have to fix the environment.
Okay, I'm going to come back to that because I have a question which is more specific to the GCC, because obviously we our GDP is heavily dependent on oil, and I'll come back to that. Let me switch to the second topic, which was the aging population, right? And if I was talking to my father, he'd say, "Son, age is relative. What a 65-year-old could do 20 years ago, right?
Yeah.
Today is completely different, right? And we, and he'll say I'm an ageist, right? And I'm sort of discriminating against him for the age he has, not for every other faculty that he might possess in terms of his awareness and his intelligence, in his in touch with in his physical strength and so on and so forth. So while I understand we're getting older, right? Are we sort of stuck in the old way of thinking what is young and what's middle aged and old? Or this is a more profound problem just because we're not increasing retirement ages or making it higher, and we're forcing people to retire at 63, and so therefore the state has to take more burden because they're not in the economy, they're not producing for the economy, so therefore they become more dependent on, I guess, the youth having to push money into the system so that they can be taken care of. which side of the fence are you on, or are you coming from a 360 view on this?
I think it is all of these above. All of this
Right.
above, all of the above is at play. So, the way I look at it is two parts. One, the rich economies getting old, and the not so rich getting old. So the rich getting old have a have a better problem to solve, and for them, and so this is the Europeans and the Japanese. Let's put it this way: they are rich and they're getting old. Uh, their younger generation is not producing enough children. They are not marrying. They have more pets. Japan has more pets than children below the age of 15. So these are rich people, and they have a lot of money and they want to consume. Except the economy is not built for the old people. So whether it is mobility, whether it is even simple things like my iPhone, if my father wants to use a phone, he doesn't see it very clearly. So why can't we have bigger screens on the phone? If he wants to read books, he's fond of reading books, but the print on the books is so fine that he needs a bigger iPad, and then he needs to expand the letters to read books. So I think we haven't built an economy for the old people. Now, on the other end of the spectrum, you have China, which is getting old, and it never became rich, and it's getting old before it became rich. So the problems are of a different type. Who is going to look after them? What is the government's responsibility going to be? Because these people will not be able to afford the health care and the care that they need, old, senior care that they would need. So I think the problems are on every side. As an economist, I worry about the shrinking workforce. I worry that if your working force reduces in an economy, then that economy cannot grow. So, what would be the growth engines for an economy which is highly skewed towards old people, and there are fewer workers available? Now, if we move to the third mega trend, at some stage we have an answer for it, uh, but right now we haven't got any answer for that. And for me, productivity drop would be a bigger concern for such countries, and we can see that in Europe. Look at the growth rates in Europe and compare it with the rest of the world. Compare it even with the US, and it's stagnating.
But so let's take this problem, right? Let's discuss a little bit. We'll try and we'll try and humor each other with some solutions, right? I'm not suggesting either one of us are going to. So let's look at those rich countries. I think the rich countries, there is actually a significant economic opportunity, right? Because as you said, these people, they're not poor, they're not dependent, they have the money, but the world is not built for them, right? But if people started building more things for them, it's not like they wouldn't be able to consume those, because there is obviously a clear need, right? And you made a very good point about reading books. That's awesome. Or phones, right? So why aren't we actually doing more for that generation, rather than being, with all due respect, obsessed with the Gen Zs and the Gen Alphas and whatever comes after that, right? So there's a huge economic opportunity. Question for you, maybe it's an economist question, maybe it's not. Are you seeing an uptick in that part of the world, in that industry? Are you seeing more and more businesses, more and more money, especially from a bank's perspective, saying, something, we really want to power businesses that are furnishing or servicing the old? Are you seeing that shift?
Uh, uh, I think not so much here because we are in the
Yeah,
UAE, one of the youngest countries in the world.
yeah, I agree. I agree.
Yeah, less
Just
than
taking a
5%
macro
of the
view.
macro view. This is called the silver economy,
Yep.
and the sil and there are businesses which are focused on silver economy, and the silver economy is booming
Yes.
because it is niche. Not many people have understood the opportunity, but companies that have figured it out will be making a lot of money, are making a lot of money.
And have financial institutions understood it? Have they understood it? Have they started designing products, and have they started backing these businesses?
I don't think so. Logging into a bank account in an app and registering yourself for the first time, I, I'm telling you, I get sometimes confused and I can't figure it out.
You're right. You're right. Everybody wants to drive their UI UX to be like Instagram, right? I don't
Correct.
want to have nothing against Instagram or TikTok, but you're right. Nobody's kind of saying that, something, my biggest users are actually the guys who are above a certain age. right? And they're as digitally savvy now because they
Yes.
can't. But it's just that you're making it so hard. So I understand. Uh, what will make them wake up?
And they have the money. So I think it's when the banks smell the money, they will wake up. So they know that these baby boomers and the silent generation above that, the 75 and above, are the richest people in the developed countries. In fact, the Gen Zs and the Gen Alphas and all the younger guys are living on their parents' money right now. They don't have that money,
Yeah.
what their parents have. So I think it's when they smell the money, they will see it. I think fintech companies are already realizing it. The banks will realize it at some stage. But we need to come up with products for the old people who have the money. Simple thing is about traveling. Now we have companies that have travel options for the senior citizens. A very simple solution. And this and these senior citizens have all the money and all the time in the world to travel. And they're traveling. So we need to think in that direction.
And very, very quickly, what should the poor countries do? Increase the minimum working age, keep people more
Yeah,
productive.
yeah. I think the poor countries need to produce more children to begin with, so that the dependency ratio is managed. We have more people contributing. Um, as far as China is concerned, I think years and years of single child policy has wreaked havoc. But on the other end, you can see how India is benefiting. We talk about the demographic dividend that India will benefit from, and it's happening. So that's an economy that will not age for years to come. And I think that's the right model, where the government intervention should be the least, and you should allow the society to develop the way it is.
Excellent.
China is where it was a
Yeah,
mistake.
and to be honest with you, between these two countries, we pretty much have 50% of the world, right?
Exactly.
And then some of the other countries, if you add Indonesia, Nigeria, and possibly Pakistan to it, I think you've pretty much crossed 55-60%. And I think you got to get these countries all right in terms of creating the challenge, because otherwise, I think problems are now becoming more and more global. The problems are no more local and isolated, because it leads to cross-border migration for all sorts of wrong reasons and so on and so forth. Let's come to the third topic, because how can we ever have a podcast without using the word AI, right? Like, I'll have to I'll have to rename this from a podcast to something else. But talk about technology and AI, right? So from an economist perspective, wearing the macro hat, there's no doubt, AI is I guess the greatest boon, but at the same time, arguably the most worrying thing that is out there. Where do you sit on this spectrum from an economist perspective?
Uh, so I think I see two ends of it, and there are two people who've commented very well on this. So on the one hand, you have a very utopian, outcome of AI, which our friend, um, uh, Ray Kurzweil gives out in his book called "The Singularity is Near." And Ray Kurzweil talks about how machines and humans will at some stage merge with each other, and that will solve most of the world's problems. On the other hand, you have a very dystopian view given by Yuval Noah Harari in his book called 21 Lessons for the
Mm-hmm.
21st Century. And he's saying that hundreds of millions of humans would be displaced by AI. I think the reality is both. Both the things are going to happen. In many aspects, we will have AI and generative AI, especially, solving so many of our basic problems that you will have a utopian outcome. Um, AI is not just AI. AI should be seen as AI in practice will be robotics. Uh, so the problem of aging that we spoke about, where we'll have fewer people to work, but you could have robots who would then bring in much higher level of productivity. And as Ray Kurzweil says, most of the humans would then have all the time to pursue what is humanity, rather than us running around like machines. Let the machines do what machines are supposed to do. We should do what humans are supposed to do, which is enjoy life and go for higher uh, level of achievements like self-actualization, giving, and so on, rather than running around and becoming like machines.
Fairly interesting.
Yeah,
Fairly interesting. Now, I think I, I guess all of us want to believe in both sides of the spectrum. It depends on where the penny will drop for each of us at an
yeah,
individual level, right? I can actually see AI uh, changing and going after jobs in a big way. There are lots and lots of jobs, and I don't mean yours, right? Which possibly get redundant very very quickly,
yes,
because those jobs were partially automated in any case in the past, right? Except they were operating the automated part of that job, and possibly there are faster ways to do it. I can see things as simple as chat gpt and others which have come through, as long as you don't get carried away, because there's a lot of hallucination, and that's a whole new thing around topic which
correct.
worries me. So let me try and take another perspective. So if you don't mind, I'm going to take an investor's perspective, right? Just to kind of make it a little bit more real for I guess the audience, right? So I'm an investor. All these trends are playing out, right? What do I do? Where do I find the opportunities to generate returns? Because a number of these trends, as you've said, have sort of two outcomes, and they could be very extreme, right? So, what does an investor do?
Yeah, I think it, we have great opportunity to make money is what I would say for sure, because we are at the beginning of the fourth industrial revolution. So when we had the first industrial revolution, which was in the mid 1700s, that was steam energy. And if you remember reading in history that steam engine and steam ships, companies that had steam engines and steam ships made a killing in those years. And then we had electricity coming, which led to the second industrial revolution that led to manufacturing and so on. And everyone who invested in manufacturing, starting with Ford and so on, made tremendous amounts of money. The third industrial revolution was computers in the 1970s and 80s. And the computer companies made a lot of money. IBM was one of the first companies to make people into millionaires. Uh, and now we are in the age of AI, the fourth industrial revolution. So I think we need to look at the enablers of AI before we look at the users of AI. If you want to make money, and in the enablers, we are looking at number one, hardware companies. And when you talk hardware, you immediately think of Nvidia. Nvidia is a one in a century company. They have hit upon something which the others are still trying to figure out. Look at how Intel has been left behind, or AMD is struggling to come up with anything comparable. And the second one would be software companies. Now there are software companies that come in all hues, but I look at Microsoft, which has end-to-end software solutions available for AI enabling. And then the third one would be services providers, and which includes cloud services providers, but also consulting firms who are going to actually bring those solutions to users. And on the cloud side, look at Amazon or Microsoft. They're the largest cloud companies. So if I'm an investor and I want to benefit from what's happening around me, and this is not a fad, because uh, recently we had a sell-off in the stock market where all these AI-driven stocks were sold off, and people started wondering, is it like a bubble burst? Is it like .com? It's not. This is just the beginning, and the sort of money that will be made here will be tremendous. So these are the sort of stocks that we should be invested in. If somebody doesn't want to go really into stocks, and that's my advice to most of the people, go buy the index, go buy Nasdaq. A simple ETF like Triple Q would give you everything that you want, uh, and that will make you rich over a period of time.
If only it was that easy. If only it was that easy. So the rich become richer. The poor struggle to get onto the, I guess, onto the highway. So Deepak, one thing I struggle with, right, is on the one hand, there's so much technology which is coming into, let's call it wealth management and trading, right, which is supposed to democratize investments, right, or access to
tools such as stocks and or instruments, I should say, like stocks and ETFs and so on and so forth. But at the same time, we are seeing greater concentration of wealth, right? And I know this is not a perfect example, but there were a number of these apps which came out, trading apps, which are all going to democratize access, and lots of people downloaded it. And if you actually looked at the retail, the retail participation in the stock market at the time these apps came and compared them to today, you actually have retail participation which is arguably lower, right? Before the apps. So talk to me about, are we actually democratizing access to wealth through technology, or?
Oh, that's a very good observation, Arjun. And unfortunately, you're right. Today, 70% of the trade in the US market, and on certain days up to 80%, is algorithmic trades, bot trading, where no human being is involved at all, which means the large managers, large fund managers, money managers have set up algorithms that are trading on their own. Um, they tend to uh, make the markets more volatile, as we saw what happened on 5th August, when little bit of sentiment change can lead to such massive sell-offs. Uh, on the other hand, if you look at what's happening with retail investors, they've got so many tools at hand, but uh, are they actually making wealth? Is something I worry about. I think they are becoming more and more trading oriented. These platforms have removed friction from trading. So rather than people taking an approach to wealth creation, they are now thinking that they can become rich overnight by trading. Uh, and that burns retail investors very quickly. And that explains why more and more people then start looking at equities and saying these are bad things for investments. And then they drop out of the equity market, losing all the opportunity for wealth creation, which is available so easily to everyone. So it's very sad what's happening around us. I fully agree with you.
It's right. I think these trading apps, unfortunately, most people who are getting on these trading apps are ill-informed or poorly informed. There's a whole host of content that is coming through. Most of it is contradictory to each other, and there's nothing wrong with it because people have different opinions. And I get a sense that you see two phenomena. One is there's an element of the gambling instinct. I want to try my luck. Let's buy the latest meme coin or whatever else which is coming out, right? Not even understanding what it. The other thing is there's this herd mentality, right? Oh, well, one person buys it, another person buys it, another person buys it. The first person who bought it might not be the smartest guy in the world or the smartest girl in the world, but now you have a whole sort of tale of individuals who have gone ahead and made a decision because someone else kind of took a decision and made it happen. But my fear with I think wealth management is that I think especially large institutions who are in wealth management in the capital markets and who do want to bring more of the population on the journey of actually being able to use their money more wisely. I do need to think about actually how do these apps become safe for use. And I don't mean safe in terms of data privacy and cybersecurity safe, but in terms of just the awareness, that the minimum level of knowledge that you have. But then it all beckons the question that the smartest customer doesn't make let you make money, right? Because the smartest customer then sort of it's it's the guy who owns the credit card who pays his bill at the end of every month, right? He's not the most liked customer by a typical bank. It's the one who actually revolves. Anyways, that's a rant that I have. For some reason, you've had to be on the receiving end of it.
I would like to add something to it. I mean, there is a lot of this stuff which has come thanks to frictionless trading and so on. But at the same time, technology has brought in a lot of good as well into the wealth management
Yes.
business. So, so we have really created tools. I mean, you look at our bank, we were the first ones to launch a robo advisory in this region from a bank, and and there is nothing better than a regular monthly investment into the stock markets over a long period of time, which is a sure shot way, almost 100% guaranteed way of making money compared to trading. Now, this technology has now come in the hands of millions and millions of people. This wasn't there just 5 years ago. Similarly, on the institutional side, we've created products like ETFs, and we know that more and more younger generation is moving towards self-directed businesses, self-directed trading, or self-directed wealth management. We know that a lot of wealthy people are very old, and so they need technology to manage that. So, on the other hand, technology has brought in a lot of good in the wealth management
No, no,
space.
and it
Yes,
and it will continue to, right?
yes,
One of the trends I follow quite closely, and I get quite excited about, is everything to do with the use of blockchain, which will then help tokenize, real world assets, financial securities,
exactly.
which will allow people to access, I guess, instruments, vehicles, whatever you might call it, which typically they wouldn't have been able to, right? And it'll unlock tremendous value. Last night I was reading a very interesting article in terms of there's a 2.5 I don't know trillion-dollar gap in trade finance,
Yes.
right? And how real world tokenization of trade finance instruments can help narrow that gap quite tremendously. So I think there's no doubt that technology, I think I'm talking about that sort of myopic thing around trading apps and so on and so forth. I think the intention was all correct. I think in the creation, I think the outcome has been not as desirable. And even with robo, right? Although robo has come in, it's had a pretty rocky time everywhere in the
Yes.
world, right? It hasn't sort of taken off the way you expected it to in most parts of the world, right? Including ours.
It's because people have been distracted with trading apps, and they don't understand that creation of wealth is a slow process. And what the robo does is actually bringing you the private banking sort of discretionary portfolios down to retail levels, except it's boring. But then wealth management was always supposed to be boring. uh, Except for the new age companies that now project wealth management as something exciting, like bungee jumping. Uh, so I think
Yeah,
that's where
yeah,
we've got the consumer behavior has been distorted,
has
and
been
the
distorted. I
expectations have
agree.
been distorted.
All right, let's circle back to I guess more core to what you do, and I think we left the conversation around fossil fuel and traditional forms of energy versus renewables in the new age, right? So let's be honest. If you look at the regional economy, oil plays a significant role. I expect it to play a significant role in the foreseeable future. I know there's lots of good efforts regarding energy transition happening here. How do you see all of that play out, and what does that actually mean for the local economies over the next, I guess, decade, if I may use that time frame?
Yeah, I think this is something that we spend some time analyzing, and within the region, we see two extremes. One, we look at UAE and we see how well diversified it has. I mean, what diversified economy it has developed, and then we see Saudi Arabia how it is putting tremendous efforts right now and a lot of money to diversify its economy away from hydrocarbons. So I think all in the right direction. UAE, with all the diversification, you'll be surprised to know that 55% of the government revenue still comes from hydrocarbons. Uh,
Mhm.
so that's still very large. That means we still need to do a lot. As far as Saudi Arabia is concerned, 65% comes from hydrocarbons. Uh, and they've realized that that's not sustainable. And hence they are pouring money into the Vision 2030 projects, which I think are all in the right direction to develop tourism, to develop business, to increase employment opportunities for the growing population, to get women into the workforce, to get international trade, tourism, and so on. So I think we still have a huge dependence, but I don't worry too much because if you extrapolate very long term, so let's go by the assumption that oil uh, demand would peak somewhere between 2030 and 2035, given all the alternative, energy and all that stuff that we are doing, EVs, transportation, and so on. Now, what will happen post 2035 when oil demand has peaked? uh, you will see oil prices coming down because you'll have huge surpluses. Remember, we are still discovering new oil fields. Technology is making it easier to drill deeper, becoming more efficient in extracting oil and so on, including shale. So when we reach that point of 2035 or so, we will have surplus oil and the prices will start falling. When prices start falling, only the low cost producers of oil will will sustain, will remain in the market. The high cost producers, which include the shale as well, or the Russian oil, or the deep sea Brazilian oil, or the Guyana oil, and so on, which today are making a splash, will not be able to sustain. Many of those oil reserves would actually run out, and the others would be too expensive. So the oil market will come back in the gamut of GCC. And when oil demand starts falling, you will see the market share of GCC or OPEC actually rising. So today we have a market share of about 28, 30%. At that stage, the market share will keep going higher and higher. Uh, Oil consumption may drop by as much as 40% by 2050. So you can imagine the havoc it will play for the rest of the oil producers, but not so much for the GCC producers because we are very low cost producers of oil. And so we'll have a greater sway on the market. We'll have a huge market share. And oil consumption is not going to go down to zero. It's not as though everything will transition away. It will at best fall by 40%. Many estimates say it will be anywhere between 20 and 40% fall with all the effort towards net zero and so on. So we will still be preeminent in that market.
Interesting. And over the next 10 years, do you see diverging trajectories between the two nations you mentioned, KSA and the UAE, or do you think they'll sort of align and sort of head in the same direction? Because a lot what is happening in Saudi today is what happened in the UAE 10, 15 years ago, right? So if you could see, diversification in terms of tourism, right? Real estate becoming a more important component of the overall economy. Although the dynamics are very different. The KSA has over 30 million people. UAE has 9 million, and a very, very large percentage of them are expats. Although these expats are living longer, so they're behaving more like it. Do you see different trajectories, or do you see uh, some sort of similarity in the way things will evolve in the two countries over the next 10 years?
I think a lot of similarities. Uh, I see a lot of similarities, and I think Saudi will catch up very fast, just because of the amount of money that they are putting behind it. And eventually, you'll have both Saudi and UAE complementing each other. A strong Saudi and a strong UAE is great for the Middle East and for the GCC. And I think both are moving in the same direction. And actually, this is imperative for these economies to achieve their potential. Saudi has a huge local population. So out of 30 million, about 20 million are their uh, local population. UAE has a much
Mhm.
smaller local population. So gainfully employing them and creating opportunities for them is something which Saudi has to do it much faster than what UAE had to do. UAE has achieved wonders, and I'm sure Saudi is going to achieve wonders as well. It's just a matter of another 10 years. Recently, we saw all this news about Saudi scaling back on certain projects. Again, this was hyped up for the wrong reasons. When we drill into the data, what I really see is that they scaled back on some of the long gestation periods, but they actually accelerated many other projects. So the total number of projects awarded by Saudi Arabia actually are making new records. Uh, and hence, we see that the pace is not getting reduced, but actually getting faster. Uh, and that's very good news for the region. Both countries will complement each other.
Excellent. And it's good to hear that. I'll make sure that I stay put for the next 10 years. You know, you mentioned humanity, right? We should live our lives. You obviously have a life beyond being a chief economist. You've written a book, right? And I think the book is called, let me get this right, Think Like a Golfer, Win Like a Golfer. I am a golfer.
Here it is.
Well, there you go.
Yeah.
There you go. There you go. It's a great cover. I don't know what golf course that is, but trust me, being a golfer, I'd never feel like I'm winning ever. But having said that, I want to ask you, what was the inspiration behind the book, and what are the takeaways, right? So, how do you win like a golfer?
Mm. Okay, thank you. Thank you for bringing this in. So, this is my second book. I wrote a book before that, which was called Ready, Steady, Go, and that was for, navigating your life in the corporate world. And one of the chapters in
Okay.
that book was Think Like a Golfer. And what I meant by that was that golf is a very unique game, very different from other games, and probably the closest to life. You can have, very bad shots which can lead to very good outcomes, and you can have very, very good shots that you play and can lead to very bad outcomes. And this is golf. This is the reality. And and as I delved more into golf, I realized that there are many things in golf which are very close to life. I mean, to begin with, look at the golf courses. You don't find any two golf courses which are similar to each other. Whereas when you play football or cricket, every football ground and every cricket pitch is identical. There is hardly any difference. Whereas in golf, when you go out to play in a new golf course, you have to navigate a completely different terrain. This is exactly our life. Every day is a new world for us. Every day is a new challenge. There is nothing which can be put into a pattern, and you can't follow a pattern. So you need to be very situational in your outlook and in your practice. The other thing which which makes golf so unique is you actually don't have a duel, or you don't actually interact with any other player. No one can impact your performance. You play your own game. You have a ball and you have a set of your golf clubs, and you take your ball through the ups and downs of the terrain to the target. There's very little that your opponent can do to obstruct you, unlike in football or in cricket or in any other game. So the lesson is that all of us are responsible for our own game. Very often we blame the system or the organization or the competition or a colleague and so on who messed up or who led to something, but actually we are the ones who are responsible for our own destiny. There's no better game than golf that teaches us that. Um, Golf is also, by the way, a game where you don't have any referee or an umpire watching you over the 18 holes. There's no one following you to really check whether you actually hit the ball from where it landed, or did you just kick it a little with your feet and then took it to the right.
It's an
Yeah,
it's an honorable game.
it's a honorable game. Imagine in any other game we have third umpires, we have cameras, we have you know in
Appeals,
appeals and so on. So and
reviews, and so on and so forth. You're right.
correct.
Yeah.
People use their hand sometimes in football, and you call it the hand of God, and so on. And the goal happens, and if no one watched it, you get away with that. But that's not. The integrity is very critical in the game of golf, and that's true with our life also. We can find shortcuts, but it doesn't take you very long. It doesn't take you
It
very
doesn't.
far.
And I'll go back a few years, and I remember when I got to the low double digits, right? And actually, I wasn't improving, and it was starting to actually frustrate me. My coach actually told me something very, very simple. He said, "You're going to play your game the way you're going to play your game on any particular day. And yes, your shoulder might hurt one particular day, and your knee doesn't feel great. But he says, now, if you really want to go to single digits, start managing the course,
Mm,
right? Right. And I think that's a little bit like what you just said, that we blame the environment around us. We need to manage this environment, right? We need to
exactly.
manage our families. We need to manage our
Yes.
colleagues. We need to manage our work. You manage your course better, right? And your scores will improve. So stop taking risks which are unnecessary, right? Stop taking on stop playing the wrong kind of clubs when you're on a different kind of terrain, right? It's not just a distance game, it's also
Yes.
other things. So and actually that was, in my view, that was actually the most substantive statement which came out of any golfing coach that I had had for years, which had nothing to do with my swing, but it had to do with the fact that accept the surroundings that you're in, and start managing the course. So I understand that.
And this is leadership, correct? This is leadership is all about this.
You're so correct. You're so right. So, is there a next book?
Possibly, and this one would be on investments because I just see too much happening around me not to write about it. And you highlighted that. Are we getting so distracted by technology and so on? There has to be. We have to go back to basics, and we need to go back and learn from the great masters like Warren Buffett, and see how we can become rich. Uh, uh, and I think it's very simple, except most of us don't follow the basic rules. So I'm going to write something about it.
That's great. Deepak, I actually want to thank you for making time. Sorry, I guess taken a well over an hour of your time in the middle of the day. But it is the end of the week. It is Friday evening, so I hope you're sort of heading home, or to play some night golf, whatever whatever is planned for this evening. But I really appreciate you coming on the show. It's a pleasure. It has been a pleasure over the last hour, and I'm sure we'll meet in person soon.
Likewise, thank you so much, Arjun. As I said, it's an honor to be speaking to you.
Perfect. Perfect, sir. So, ladies and gentlemen, that was Deepak Mehra, who is the chief economist with the Commercial Bank of Dubai, who is not just an economist, but he obviously is a gifted writer and has opinions on investments, which he's going to be writing a book on very soon. So stay tuned with it. With that, I'll say goodbye, and we'll see you next week. Bye bye.